Stock markets now. Kate Moore is Chief Investment Officer at Citi Wealth. Kate, welcome to the show. Good to see you.
Yeah, good morning.
Where do you stand on the rally here? Sitting pretty much at record highs for the NASDAQ and the S&P 500.
Yeah, so I've been saying I've been pretty uncomfortable with the rally, in part because a lot of it has not been driven by fundamentals. We know against the backdrop of this rally, there's been a decline in terms of earnings expectations. We've continued to take down estimates for this year. And the key thing that I'm focused on is that the uncertainty factor hasn't faded. This is still coming up in CEO and CFO surveys, some of the soft data that we've all been tracking. That we don't really have a great sense for what the next 6 months look like for one's own company operations or for the overall economy. So we're grinding higher on a lot of hopes and enthusiasm and expectations that the Trump administration will keep on backing off some of the most punitive measures, particularly around tariffs. But I don't know if that's a great investment strategy. I think we have to stay really anchored in high quality and consistent earners.
In your view, what sectors are those? Because a lot of those sectors are also at record highs. I mean, financials are at record highs. Industrials are as well. Tech is strong. I mean, what is, quote unquote, safe? What is defensive in this market where you're uncomfortable?
Yeah, so this is part of the reason why I'm uncomfortable, because the high quality stuff, the companies, the sectors, the industries that have sustainable earnings that we think will be less sensitive to some of the pain and pressure from tariffs, will be able to either pass through prices or have a lot of margin buffer, are really being priced to perfection. And, at this point, tech and AI, which I think we all understand is a durable theme and where companies will continue to have to spend in this space, regardless of what happens to overall economic growth, is very well owned by all segments of the investment community, by institutional investors, by individual investors. And as such, it's tough to say put new money to work there. That said, we would not be selling our positions in the tech and AI adjacent names. The one area that
I think I was giving you a hard time last time you were on about the stuff that were making you that was making you so bearish was so front and center. So it's still front and center. I don't know whether you missed this latest 25% or whatever it is. Maybe you held some of it. But what is your position now that we're not going any higher at this point?
Well, Joe, I think we're at a top end of a comfortable range at this point until we get the clarity. For what it's worth, yeah, I've been uncomfortable for much of this rally because of the lack of clarity and because it's not based on either macro or on fundamentals. That said, at Citi, we did not go underweight equities. In fact, over the course of this, we continued to rotate into the large cap, into these high quality, and to really stay anchored in these secular themes. So, even with my discomfort, I didn't want to step away from the equity market. So we have continued to be a market weight in terms of equity.
In general, if I'm comfortable, I'm selling. If I'm complacent, I would be selling. And lack of clarity. Have there been times in your career where things were really clear for you in the stock market?
Well, of course, there were times where I felt I had more clarity, Joe, than I do today. But there are certainly times where I have reduced risk because, on balance, I didn't have any sense for what the next 3 or 6 months would hold. My job here at Citi Wealth, though, is to think not just over the next 3 to 6 months, but what could be the next 6 to 12 months. So a longer duration than I've invested in parts of my career. But look, Joe, you know this as well as I do. If there was perfect clarity on anything, that those of us who were making investment decisions may not have a job. The machines would have taken over. They would have just plugged in all of the inputs. The algorithms would have spit out an allocation, and that would be it. There's always some judgment, and there's always some degree of uncertainty. That's what makes us love markets so much. We're constantly learning.